Hey everybody, welcome to the client support webinar on this Wednesday, February 28th, 2024. All right, a couple quick announcements before we get going. First of all, I'm going to be away on business next week, so I will not be here. So we're not going to have a client support next week, so we're skipping next week, and then we'll be back the week after. So we'll get that rescheduled for you for the week after. All right, Gene, before I get going, any announcements?
Of course, always have announcements. And the first is welcome everybody. And if you wouldn't mind, just give me a little hello in the questions area on your webinar console. And that just lets me know that you can see the screen and hear the audio. And while you're doing that, I did want to mention that we would love for you to join us for Stock Analysis Fridays. Not this coming Friday, but you can go to our YouTube channel, and I'm going to post the YouTube channel link, and you can watch recordings. Actually, yes, this Friday we will be doing Stock Analysis Friday, but next Friday we will not. So please join us for that, and I'll give you a link, and back to you, Ben.
Okay, good. Yeah, this Friday we will be here. It's the next week we will not be, okay? So, and then we'll resume the week after that. All right, let me go through the administrational items here real quick. Risks, I think everybody understands there's risk in trading the financial markets. You need to be aware of it and try to control it the best you can. You can never take the risk 100% out of trading, but you can do things like make sure you fund or use risk capital when entering the markets, calculate trade size on each and every trade. And any of the things we talk about here, please run by your financial advisor because they know your personal situation. I don't. There's a lot of factors that go into certain strategies, whether they're suitable for you or not. So that's really important. And then finally, no guarantees. All right, we deal in a realm of probabilities, which means even if we do everything right, you can still lose money in the market. So always use risk control. That's how we protect that downside. Got plenty of books on the topic. I think most everybody here has probably got one or all of them, and except for the new Art of Trading book, that's being published by Wiley, coming out this year for sure, and it's going to be about 450 pages. So I'm packing that thing with a lot of info. All right, we're going to be using our trading system. I think this needs no introduction. Everybody pretty much either has it or has parts of it. You can always add on at a later time. All right, so let me get out of here. How many people are in GBTC? If you subscribe to the More service, you certainly should be in it. All right, that's for sure. All right, good. We got quite a few people. All right, just so you know, we first recommended this right around the $10 mark. The last I looked, it was right around, I think about 54 or so, a little change on that, maybe 53.93 right now. But if you had put $1,000 in, roughly at the $10 mark, you'd have roughly $44,000. If you put $100,000 at that $10-ish mark, you'd have about $4.4 million. So this has certainly been a huge winner. I think this is going to continue to skyrocket. I do think we're probably going to get some form of pullback at some point, but I think we're in a wave 3 inside a long-term wave 3. So I think all good on that front. So hopefully you were able to participate. For those of you using Ninja, same information here. All right. And look at this. I looked at it this morning. It already went up a little bit, maybe pulling back a teeny bit now. Okay. So there you have it. All right. So you might want to talk to your financial advisor about what to do that. You'll definitely be chasing the market a little bit at this point. You certainly could wait for a pullback, but if you're going to keep it a couple years, I think this price is going to be looking really cheap at some point. All right, now I've gotten a lot of requests for adjusting some of the settings on the software. So I want to go over that. I want to talk a little bit about the pyramids. So I want you to take a look at the pyramids on the chart here, which obviously did a great job on this crypto market, but look how many there are. All right. Now I'm going to open up the settings window. So I'm going to go to indicators and go to pyramids. and you'll see a whole host of settings here. And I'm going to do this on TradeStation too. But take a look at this here and notice that we've got something called a MinScore up here. And I'm going to go over this on for those of you using TradeStation as well. So the MinScore as a default comes as a 5. And basically what that does is it's looking at the fractal patterns that form a pyramid. And you notice that we have some large pyramids and we have some smaller ones, some elongated, some more sharp. So all those are actual valid patterns, but they're different. They're different configurations. This one here, when you see something like this one, I mean, look at this. That's a perfect fractal pattern. So if you look at my video here, if you take your hand, all right, and face your palm towards your face, this is a fractal top, the middle finger, all right? These are the price bars. Think of it as price bars preceding and coming down. That's a perfect fractal. But, you know, that's a fractal too, okay? So there's different types of fractal patterns. Excuse me. Okay, so there's different types of fractal patterns. And so some are more perfect than others. And the idea is that if you want to restrict or make the pyramids more strict, looking for more perfect patterns, that's what the MinScore does. If you want to make it a little bit easier, you can do that as well. So 5 sits at a sweet spot that I designed that basically makes the pyramids form on both irregular and good fractals. If we raise or lower the MinScore, all right, it will change that configuration. Let's just try 7. Now 7 should be more strict, so we should see less pyramids. Now sometimes you'll change this min setting and you'll see no change at all. And that's because the price bars are configured in such a way that they didn't react to this more strict settings. So let's just try that. Now watch the pyramids on my center chart. Woo, okay, they just, a lot disappeared, didn't it? And the reason for that is it removed the more, well, the less perfect patterns is, I guess, the best way to say it. So that's what the MinScore does. So if you find you're in a market, the reason why we're giving this setting as a possibility you can change is because if you find you're getting stopped out on good trends too often using the pyramids on a 5, make them a little bit more strict. And maybe that'll take out the ones that form that have been stopping you out on maybe irregular patterns. So let's go back and put this in as a 5 again, and you'll see those pyramids reappear. Okay, boom. All right. So that's kind of a neat setting that you can play around with on your own. Now, in this particular situation, the pyramids were perfect. Okay, so no real need to change it. If you change it to a higher or more strict number, the higher the number, the more strict, and you remove some of the pyramids, if you're at the end of a trend, you may not get out at as well as if the pyramids were at a less strict area. So for example, your stop would be here on this pyramid, but now let's go and change this back to a 5. Okay, and now your stop is at a tighter stop. So there's times when you might want that stop tighter. So you can go back and forth. If it's the beginning of a new trend, you may want to use a 7 or a 5 to get in. And then once the trend is underway, change it to a 7 until you think you're near a top. All right. And how would you think you're near a top? Well, all right, you could do a fib extension or Elliott wave to see if you're in a 5 of 5 inside a 3, for example, or something of that nature. All right. So kind of, you know, different ways in which you can manage that, but you can play around with that setting and see how it works. But any questions on that? But again, it's looking for the fractal price bars that make up the pattern. It's kind of cool setting. All right, let's take a look at that on TradeStation. All right, so if we go into TradeStation studies, and go under edit studies and then pyramids and then customize, all right, you'll see that same type of setting here, not at the top, but right here, okay? And that basically will do the same thing, okay? So all these settings are all across the board on all the different platforms. They may just be in a little bit different position, but that is the idea, okay? Gotta love, again, Bitcoin. I know some of you just showed up. How many people are in Bitcoin? How many people were subscribed to our More service? Because that trade alone is worth about 10 years of the More service. No joke. If you put $1,000 in that, you would have had 44,000 bucks. So hopefully you got into that. All right, good. Quite a few of you did. Excellent. All right, so the other thing, again, that I've been asked a lot about is Elliott waves. So I guess I'll go over that a little bit. And more specific, the specific question I've been asked on that is how the Elliott waves fit inside each other. So let's just, we won't put up time frames here, but let's just say this is a short time frame. And this is your intermediate time frame. Okay, I'll just do that. And this is your long over here. So we'll kind of, you know, create three different possibilities. So if you have an Elliott wave, let's say a bullish wave here, and you have 1, 2, 3, 4, 5 waves, okay? And on this, all right, you have a move up from the bottom, but you can't really count the waves that well. Let's say it kind of looks a little bit like something like this. You know, you can usually see 2, and then maybe it goes up here, you know, a little bit pull back. So you're kind of like that maybe, or something of that nature. Actually, it'd be more like this. But my point is sometimes you cannot count the waves that well on the time frame you're trading. So let's say you're trading this time frame, all right? If you cannot count the waves inside this move up here, then go to a lower time frame. You know, this could be a 60-minute, this could be a daily, this could be a weekly, this could be a 15-second. If you were day trading, this could be a 1 minute, and this could be a 5 minute. The key is you want to have at least, if you can, at least a minimum of 5 time frames higher. So if it's a minute, you want 5. You can go to 7, you can go to 10, but there comes a point where you go, you know, some people like to look at the 60 or the daily. That really gets out of the realm of helping you count the waves inside waves on the current time frame you may be using. So that's usually why I just use 3, okay, that type of thing. All right, so in a case like this, when you get to the 5th wave here, then if this particular wave is really hard to read and is more like a straight line up, well then this will be some impulsive wave. It could be a 1, a 3, or a 5, right? But the idea is, and it's going to depend on the history before that. So if this was a bottoming thing and we just took off, then this is a wave 1. If this is you know, already took off way down here, this could be a 3, okay? And your owl and everything else will help you with that. But the idea is whatever the impulsive wave is on the time frame that you're looking at, go to the lower time frame, and if you use your fibs, and your fibs can be attached on the lower time frame to 2, 3, and 4, that's going to give you a target for wave 5, which should mean the end of that trend on the time frame you're trading, but you can't see it. All right, so again, people go, why do I use 3 time frames? Well, this is why. All right, it really is helpful to be able to move down there. And of course, if this is wave 1 here, then this may be wave 1 on something that could evolve into a much bigger move up in the long term. So this wave 1 here, this is a 1 here, all right, would represent this leg. And then this would represent the waves inside wave 1. Does that make sense to everybody? And again, it doesn't matter what time frame you're at, or it doesn't matter if you're a day trader or a position trader. Okay. Now, also too, let's go ahead and erase this and go in and take a look once again at our time frames. We'll just call this short, intermediate, and long. What if we have a move up here, 1, 2, 3, 4, 5, and we start now, we're at the end of 5 here, and let's just say this is your 1 up here, and what can we expect? If this is a 1 and it's starting from a channeling market, then we expect 2, right? Okay, 2. So 2. And at this particular point, what would this represent here? This would represent a new trend down here, all right, but only a wave 2 here. So what do we know about a correction? What do we know about a wave 2? It's usually an ABC pattern, right? So it's A, B, C. And wave 2 can be tricky because it can also go all the way down to the starting point, whereas a wave 4 usually cannot actually, okay? So if we have a change in trend here, this wave is called A, this is B, and this is C. Now, how many waves are in wave A? Is A wave an impulsive wave? Yes, it is. It's an impulsive wave in the correction. It's not an impulsive wave in the bullish trend. Let me repeat that. It's an impulsive wave in the correction. It's not an impulsive wave in the trend. So in the trend, this is wave 1, that's impulsive. In the trend, wave 2 is a correction. However, in the correction itself, wave A is an impulsive wave because it's moving in the direction of the correction. Now, what does that mean? Well, if this is an impulsive wave at wave A, that means you're going to have 5 waves over here on the short term. All right, so maybe what we'll see here is an A, B, C made up of 3 waves in A, right? So that's A wave. Sometimes they're not so neat, which makes corrections a little more difficult, okay? But that could be an A wave. This is a B wave, so this will be an A, B, C, right, to the upside. And then once again, C wave is going to be an impulsive wave. So that's going to be made up of 5 waves to the down. 1, 2, 3, 4, and 5. And then we end down here, okay? And then after that, then we start another move to the upside, all right? This would be a wave 2 bottom here. And then we start the whole process again, right? So that's kind of the deal with that. So when people are looking at trying to find targets for A and C, all right, and even B, because during the B wave, you have an A, B, C here, right? But that's kind of getting a little too minute, all right? But there is a possibility if you go inside an A wave and inside a C wave to know, based on using the extensions, okay, where these things are going to end up. All right, and then usually this B wave up here, all right, usually, all right, will retrace but not go above wave 5. And then C wave is another 1, 2, 3, 4, 5 that you can take. Now, here's the difficult thing. When A wave starts, it's really difficult to know until you can see the waves inside it where A wave is going to end. With C wave, we have 2 things going for us. One, it's usually a fib. It's going to end usually on a fib correction. Wave 2 is a little difficult. Doesn't always do that, but usually it ends in a wave fib correction, so you can use the longer time frame for a target. And then you can use the wave 5 counts to get a more precise ending inside this target. And usually C wave has to be at least as long as A wave. So if you have a short C wave, that usually may mean it could be going into a complex correction where you have like an A, B, C, D, E, okay? So you got to keep that in mind. Any questions on that? And again, this could be the representation of a bigger move up here on the long term. So sometimes, for example, like Bitcoin or any of these things, we'll say, well, I'm in it for the long term because we're just beginning a significant trend. And if I try to trade this market or this market, I'm probably going to get stopped out on the pullbacks. So at that particular point, if I'm committed to a long-term trade, all right, I'm not going to worry so much about what's going on underneath it in the lower time frames. But if this is at the mature part of a long-term trend, then I'm going to use this to see if I'm getting in too late and so forth. So a lot of, again, you can do this on any time frame. And once you get really good at it, it's really not that complicated, and it is not that time consuming unless you're in a market where you can't see it. All right. If you can't see it on any time frames, then the Elliott wave is not going to be of help to you then. And you're probably may be in a complex correction on a longer time frame, which is why it's unreadable, so to speak, on a shorter time frame at that point. And therefore, there's no profit potential on the shorter time frames, not until the correction gets over and we start to see some impulsive waves move on the shorter time frames. Okay. Any questions on that? Was that helpful? Because I get asked that a lot, and I kind of think that's worth talking about here today. Hopefully that kind of will clear it up a little bit. But again, the key thing is it doesn't matter, all right, what your time frames are or what your position. So the short-term time frame, when we have the day trading room, is a 15-second. Position trading, 60 minutes. All right. Intermediate is 1 minute, like I said before, and a daily. And then the long term is a 5 minute and a weekly. Could you use a 7 minute over here? Sure, you sure could. Okay. As long as it's at least 5 time frames, usually above it, okay, it's probably a good idea. All right. So that's kind of the deal with that. Now, if you are very long-term investor and your intermediate chart's a weekly, and this is a monthly, this may be a daily, okay? So it all depends. It's like when you're trading mutual funds, for example, you may want to use this or long-term stocks. And so you can check your broker when he calls you to see if the technicals and the Elliott wave are in sync. Okay, so that's kind of what, I got a few questions on that, so I wanted to make sure I covered that to make sure you all had a good understanding of that, and also a recording on that so we can show people on the recording how that kind of intersyncs between the different time frames. So that's all I've got today for you. All right, let me just see if there's any questions. If anybody has anything specific they want to review, let me know. And again, we will be doing stock analysis this Friday, so please come to that. All right, and I'll be happy to look up any stocks you want me to look up there, okay? So that's really good. All right, well, I guess we'll call it a day here. I don't see any questions coming in. I want to thank everybody for being here. So remember now, next week, we take a pause. I'll be away, and we'll resume the client support on the following Wednesday. All right, so everything gets back to normal after next week. All right, thanks so much, everybody. And we'll get this posted in our special unlisted area on our YouTube page that you can access through the VIP client portal. Have a great day, and we'll see you back here in 2 weeks. Bye-bye.